Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty podcast. I'm excited to talk about a topic that we don't get a whole lot of coverage on, that needs to be more a regular part of a real estate investor's conversation. And that's two words for you: opportunity zones. My good friend Josh Woodward, who's the CFO and head of new product development at Lima One, he'll be joining us in just a few minutes to talk about just this and what we can do to either take advantage of these opportunity zones. How do we invest in them? How do we vet deals? And what Lima One is doing to best position themselves as lenders for these types of opportunities. Then we're going to be jumping right into a couple of interesting things. One, how smaller apartment units are outperforming the market on both vacancy and rents. So I'm excited to have that conversation as well. Should be a quick 15, 20 minutes, not even, and we're about to hit go. But just before we do, I'd like to talk about the one, the only, the most bestest person that I know, Marcus Santorelli, and his company, Realty Real Estate Investments. They're the ones that have sponsored this podcast, and that's why I want to make sure that they get an awesome plug. And Realty Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. Again, that's turnkeyrealestateinvestments.com. All right, Josh, welcome to the show. How are you doing, man?
Great. How are you?
I'm doing awesome. So help me understand, right? Like, we've got this opportunity zone thing. There are obviously opportunities here for real estate investors to capitalize on. Give me your background, who you are, what you do, and then let's start kind of running down some of these tax benefits, some of the opportunities in the opportunity zones.
Yeah, sure. So first, thanks for having me on. I'll give you a quick background. My name's Josh Woodward. I'm CFO of Lima One Capital. We're the nation's leading lender for real estate investors. We focus on fix and flip, new construction, multifamily, rental properties, really the entire spectrum of investment property lending. And so my background has always been in some form of mortgage finance. And most recently, before I was at Lima One, I spent a lot of time at Bank of America really understanding how capital regulations work and how those impact lending in the United States. And so that's actually a good segue into sort of how these opportunity zones came into place and why they're so important. So if you think about opportunity zones, they are really designed to encourage investment in areas that otherwise would not be heavily invested in. And as we all know, it's hard to get loans on properties that are in some sort of distress or in areas that are in some sort of distress. And so the idea here was, let's create a real meaningful economic incentive for real estate investors to develop and invest in areas that need economic investment. And so what the Opportunity Zone Act does is creates two primary incentives for investors. And you kind of touched on it earlier. It's interesting. Not a lot of people are actually focused on this. We don't hear a lot of people talking about opportunity zones in our conversations with clients, which is particularly interesting because most of the clients in our space of the world that are actively doing flips or doing investment real estate are probably already operating in opportunity zones or at least very adjacent to those opportunity zones, right? So
yep.
The two primary economic benefits of the Opportunity Zones Act, one is capital gains deferral. And so what happens if you have a capital gain and you invest it in an opportunity zone fund, and I'll talk more about why it's got to be through the fund conduit in a minute. If you invest in an opportunity zone fund, you do not have to pay capital gains tax for as long as you have it in that fund. So that's a huge benefit, right? Not just the time value of money, the actual benefit of use of that money. Along with that, you also get a reduction in your basis over time on that capital gains tax. So let's just keep numbers simple. Let's say you had $100,000 in capital gains, you sold Microsoft stock, and now you got $100,000 in capital gains. So your capital gains tax rate might be 20%. So you would have to pay $20,000 today or whenever you filed your taxes. So what the Opportunity Zone allows you to do is put that $100,000 into a qualifying fund. you don't pay that $20,000 for at least 5 years, so long as you hold it within that fund. After 5 years, you're going to get a reduction in that basis. After 10 years, you're going to get a reduction in that basis. And after 20 years, you're going to get a reduction in that basis, up to 15%. So now that 20% becomes $12,000. That $20,000 becomes $12,000 roughly.
Yeah.
And so that is, again, real dollars. That matters a lot, but that's actually, in my view, not the most important economic benefit that you pick up. After 10 years, whatever asset is held within that opportunity zone fund, any appreciation in value goes tax-free when you sell it. So again, we'll use simple numbers. Let's say you used that $100,000 gain, you bought a property, a rental property. 10 years later, that property's worth $300,000.
Yeah.
That $200,000 difference is tax-free after 10 years. And so that is tremendous for investors running a buy and hold strategy, something that I think people just haven't focused on yet. It's something that I think is really important to point out.
So you're talking about investing in an opportunity zone, but you can only do so using a qualified fund. I can't just take let's take your example of $100,000. I can't just take $100,000 and go identify a property, say, hey, it's in a qualified opportunity zone, but invest or buy that property using debt or using leverage without putting my money or my money through a fund, right? It has to go through a fund.
Yeah, that's correct. And actually,
Okay.
It sounds a little complicated, but the reality is it's not too bad. And obviously, you should consult your tax professional or your legal counsel to help you with this. But it's as simple as an LLC. The only thing that the tax law mandates is that it's got to be multi-member. It's got to be some sort of partnership. Now, I have an opportunity zone fund myself, and it's literally 99% me and 1% my wife. Don't tell her that. I'm just kidding, of course. But it's
well,
really
hey, I mean, you know, that's a good thing for her. Right.
Exactly. So, but it's really just that simple. Now, there are some specific elections that you have to make in terms of forms that you have to file with the IRS. But once you set up that LLC partnership, you're good. The only requirements once you set up the Opportunity Zone Fund are how the money that's invested is used. And so, for example, if I've got $100,000, we keep using that example, the Opportunity Zone Fund can't just hold that $100,000. It's got to go into a qualified opportunity zone. And they generally apply a 90% rule, or what's called a 90% rule, which means that 90% of the assets have to be invested in a qualified opportunity zone investment. Every 6 months, they're going to run that check. Now, you might be thinking like that's a pretty difficult thing, because if you're trading in and out of properties, the timing could be such that it makes meeting that standard pretty difficult. Well, the good news is they've considered the fact that, especially if it comes to a rehab project, you're going to need some time to get that money invested. And do so in a way that makes sense. So we'll focus specifically on buying real estate, because you actually don't have to buy real estate. You can invest in the equity of an operating business with an opportunity zone. But for the purposes of this conversation, let's just think about it in terms of an actual piece of land and or piece of land with a house on it. So if you buy a piece of land, it's really simple, because all you have
Josh,
to do.
question for you. Sorry.
Sure.
If I am, so let's say I have a liquidity event, right? Like I'm working for somebody full time, and I've started a small business on the side, and all of a sudden now the small business is doing great, and I've got some small. I've got $150,000 a year in distribution from the small business that I didn't normally have.
Mm-hmm.
That's considered income, right? That's not a sale of something. If I were to sell that business, and let's say I got $500,000 for that business, then with the $500,000, that's the capital that I can invest into this fund that I create, that I own, the 99%, the 1%, and then. Absolutely. So it would make sense if I'm looking at, let's say I'm a California investor, because I like picking on investors from California, because, who doesn't? You know what I mean? And so let's say I'm looking at like the state of Ohio or the state of Michigan, and I know for a fact that I'm going to purchase property in these states. It would behoove me to create a fund in this state and then buy assets through that fund and capitalize that fund with the sale of my previous asset.
Yeah, that's right. You don't
Okay.
actually even necessarily have to have the fund in advance. The fund can be ex post fact, and in fact, you could even locate the properties that you wanted to buy before you set up the fund. It just all depends on how you want to execute the strategy. But yeah, ultimately, any capital gains, whether it's from the sale of assets, whether it's from the sale of stocks, whether it's from the sale of a business, is opportunity zone eligible. It really just comes down to, now that I've got this gain, I've got, and this is key, I've got 180 days to invest it. So whether you do that, the next day, or whether you do it on day 179, you just got to make sure you get that capital gain into a qualified opportunity zone fund within that window. So that's certainly something to make sure you're aware of.
So let's talk about Lima One and the debt that I can put on if I'm purchasing property the right way through a qualified fund as a result of the sale of a business, giving me additional liquidity. How can Lima One help me with debt for those types of deals? I don't want to say the word opportunity, but those types of deals. Right?
Yes,
exactly.
Yes, that's a great question. So one nice thing about the laws as they're currently written is there's no prohibition against debt, which essentially means that you can take as much or as little leverage as you want. And I think that's important because your capital gain may or may not match the asset that you're trying to acquire in this example. And so, for us, what we're trying to enable investors to do is take that capital gain, pair it with the amount of leverage that they need to, one, acquire the asset, but then also remember, you've got to substantially improve if it's not raw land. So if you're buying raw land, you're going to do a new build, the substantial improvement threshold is met. However, if you're going to buy a house, you've got to substantially improve that house. Substantial improvement is defined as putting as much into the renovation as the allocated value of the structure. Now, I won't get into the details of how you determine allocated value versus, of the land versus the structure, but suffice it to say, these are intended to be major rehab projects, which is going to require major amounts of construction and or rehab. And so that's where we come in, because we allow you to take that day one gain, get it fully invested, and then use our financing. We call it build to rent or fix to rent to essentially acquire the asset and then do the renovation to meet that substantial improvement threshold. And then the beauty of our product is it converts to a permanent loan, a 30-year either fixed rate, or you can do a 5-1 arm, but fully amortizing loan that's going to allow you to hold that asset through that 10-year hold period. So you get not only the capital gains deferral, you get the reduction in the basis, but then again, the primary benefit is that elimination of any tax on the increase in the asset value. So really right there in one package, you're able to take on one of these loan products, execute the entire strategy within your fund, and now you don't have to worry about any refinance risk or any problems matching capital down the road, because you've already got everything you need to take advantage of that opportunity zone fund.
Yeah, insane. I love it. I think this is a fantastic strategy. If I want to get in touch with Lima One, and I have my fund set up and I'm like ready to rock and roll, I've identified some opportunities or some deals that I want to buy, what's the best way to get in touch with you or anyone at Lima One to like start that process?
Yeah, so first, easiest way is just to go to our website, www.lima1.com. It's a great place to really see all of our different loan products, including the ones that I described, the build-to-rent and the fix-to-rent. But outside of that, you can call our main line or email me directly. My email is josh@lima1.com. And if you don't see me at a conference or don't email me directly, I certainly hope that maybe somewhere along the line we can talk about this. This is something that's going to continue to be a bigger and bigger. I think you're going to hear more and more about this as time progresses, because it's certainly going to be something that provides investors, particularly investors who are doing these flips and new builds and rentals, a ton of tax advantage that I don't think many people are taking advantage of right now.
1,000%. I could not agree with you more. Josh, thanks so much for joining me. I certainly appreciate it. Your insights into this opportunity zone world, awesome, man. Keep it up. Certainly
Thank you so much. Appreciate it.
Hey, you got it. Think Realty Nation, hope you learned a lot about the opportunity zones, but don't go anywhere. We're still having a quick conversation about why smaller apartment units might be outperforming others. This next segment is brought to you by Real Property Management, which is the largest property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions around and throughout the country. Learn more at www.realpropertymgt.com. You can also call them at 888-806-7088. So what's the beef, right? A recent article on nreionline.com titled "Smaller Apartment Units Outperform the Market on Both Vacancy and Rents." Kind of interesting to really summarize this in one paragraph quote. The demand for smaller units, mostly led by young renters, has increased for many reasons. This is according to CoStar. First, average rents are growing at a much faster rate than wage growth. Very interesting. Well, but we also kind of knew that. If you're paying attention to the Think Realty podcast, you already know this. The average monthly rent nationwide now sits 24%, above its pre-recession high. Second, rising student debt levels limit the amount younger renters can allocate toward rent. And when we had Think Realty Radio, we used to talk about this all the time, right? We had the student debt issue, we had the subprime car loan issue, all sorts of things. Third, millennials are choosing to get married later in life, meaning the need for bigger spaces is now of lower priority than compared to earlier generations. And finally, job creation is concentrated primarily in major metro areas and select secondary cities. In major metro areas, Chicago, New York, Atlanta, guess what we don't have? Space. So something else to consider. What are your thoughts? I kind of agree with this article. I mean, you can find it at nreionline.com, titled "Smaller Apartment Units Outperform the Market on Both Vacancy and Rents." I agree. That's all I got to say. And I want to know if you do the same. So go to thinkrealty.com, voice your opinion, offer your suggestions, criticize it. We'll bring it. I love a good controversy and a good debate. Go to thinkrealty.com. Have questions for me, you can find me there. You can find me anywhere online at Abhi Golhar. This podcast is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Please visit www.turnkeyrealestateinvestments.com. Until next time, Think Realty Nation, happy investing.